Oh, here we go. CTM. What is going on, everyone? Hope you're well and doing great on this relief rally Wednesday. Daniel, I mean, the true form, right? Yesterday it was so over. Today we're so back. What changed? It definitely wasn't just Jan Street, right? Getting called out for manipulation. By the way, we talk about zero hedge. Like, I don't know if I say 1%. I don't know if I say a half a percent. I don't know if I say 3%. Most of it is just absolute noise. But then you have this high signal, and they've been for months and months just talking about how 10 a.m. I've talked about it with you all before because of highlighting their work at 10 a.m. Eastern time. You would just see the smash down occurring on Bitcoin. It turns out that they had a lot to do with the Luna collapse, and at the same time, they were told to go ahead and pull those algos. Yesterday, we didn't have the 10 a.m. smackdown. Today, we didn't either. But we're not looking at just Bitcoin and crypto bouncing here, and they are bouncing, no doubt about it. But we're seeing equity markets here across the board healthy and looking good. And what changed since yesterday? I have no idea. I have no idea what changed since yesterday. Here and that's the best part about it. I want to talk about and just build off of our analysis yesterday of what's taking place here on Bitcoin. First, when I say I don't know what's happening and I don't need to and we don't need to, we want to. We definitely want to have the best understanding we could possibly have. And in the end, is it going to be, how are you going to distinguish was or is, and don't forget, don't get comfortable. That's like the highlight of today's video. We're about to have some long trades now pop off. By the way, and as far as stocks going into this afternoon's earnings, the only position we have is Ethereum. Thankfully, we're starting to build a little bit of a buffer, but I don't feel comfortable going into earnings and knowing that this thing could gap either way tomorrow. An unrealized position of 5% of 50% of the account, that could still very easily go against us tomorrow. So never get comfortable. Always be aware of the risks. I don't think that I don't think that yesterday's State of the Union was the catalyst. Look, if someone could give me a reason for why, I am just completely I'm not sure of what that reason is. Our positioning here has drastically changed. We closed out here this morning our Ethereum short trade, and it was a great trade over here. Be able to book 36%. Now we're flat going into a pending long here on the Bitcoin, and Bitcoin also for the year up a nice 18%. It's a good way to start the year here. And then we see obviously Cardano also closing out its trade over here at a loss of 7% and now minus 2.5% on the year. And Solana is minus 4.5% on the year. Good way to start off the year and lots of opportunity here over the next 10 months. It's not just here on the buy and sell side. We see over here that we have pending long on buy side boost. Buy side boost crowd right now is just absolutely loving life. They went from sidelined they've been on the sidelines. They had this one little in and out and have just absolutely preserved purchasing power. And now they're getting ready to act. They love this. They love when it's their time to show up. Ethereum also over here is getting ready for a long over here. We talked about likely would be Ethereum first. It looks like they're both looking to go at the same time. And then we have over here Don's version of buy side boost, which only has one potential signal a day. This is for waking hours in both US and in Europe. And this is right here. It looks like Ethereum is very close. It looks like Solana is very close to acting. By the way, I will very shortly clean up the HeyU identifier very soon, and just by adding a 1, as Don showed me, in the right place will blink we'll get that over. Uh, see, that's what Ace. Thank you for that. 8 or 9%. That's a big move. Now, you know, I don't cross my fingers. It seems that Nvidia here is gonna come in strong, and I imagine their expectations are probably pretty good. But you never know what could cause a sell the news type of event. I wanted to bring it up. I should have brought it up. I've been talking about for a while now, for 5 months now, that the one red flag here would be a pullback in capex spendings by one of these hyperscalers. And then we've seen now over the last couple of weeks that's become like a lot of people are now aware of that and talk about that. I have some other information from some other people about other potential warnings and red flags that we could look for. So tomorrow, off of the back of Nvidia's earnings, that will be a good thing to look at. I'm not comfortable holding a 5% position into the earnings simply because that could gap up or that could gap down from here. I don't know which way it's going to go. Nevertheless, I have a system to follow, and I'm following the system, and that is over there is the way to go. Ultimately, assuming that, all right, let's start off with don't get comfortable. And I mean that. So yesterday we talked about what happened over here in the summer of 2021. And it's not that we're looking for a fractal. We're not looking for a fractal to go ahead and guide us. What we're saying is that what we saw happen in that particular period was a very similar structure develop. Price broke up and sharply. I brought up the liquidations to show you over here, and you could see that. Well, in this area, there's a lot of short liquidations, right? And this is coming in at a price somewhere below 69,000. Is there a good chance that we're going to go ahead and take out those shorts? And if that happens, and if you've already seen, look at over one day, look at all the long liquidations and leverage building up. So this kind of describes from a highly levered Desian point of view of what to watch out for. Like, yeah, we could easily come up 69, take out or above, right? Take out all that leverage. I know that we have longs pending. It doesn't, and by the way, just because we're watching out for it, and it's better, right? Don't get comfortable. Don't take out 100 leverage long. And by the way, we trade spot only, no leverage, right? Don't get comfortable, and you never know though. Maybe we get a breakout, and maybe the breakout carries. It certainly is, and we've seen it in the past when you get this type of daily candle. And don't forget, there was one over here, but it was off of that massive sell down. But when you get these type of candles, remember back in 2021, so many of the bottoms came off of long, bullish, deep engulfing candles. And it could also be that. Like, do not override discretionary and be like, I'm not going to take my buy signal because there's a chance that we just wash out leverage on the short side and then wash it out on the long side. It's just a stop loss. If you and guess what? If we see something like we saw last time where it would be a breakout, and then that was brutal. It came all the way down and swept below, and then boom, that was the bottom to the all-time high. And if look, you just take them as they come. I expect like, okay, 6 out of every 10 trades I take are going to stop out. And then I know that a small percentage of the ones that wind up carrying are going to make the overwhelming amount of profit. Just saw one of those examples on the short side of Ethereum, 36% trade on the short side. It's beautiful. Obviously, the profit potential on the upside is much greater, right? 36% on the short side, that's a deep profit. On the upside, not really. So just be calm. Just be calm. And ready. So that would be a victory, holding above back into the pocket if we're able to get it. I didn't think we'd be down here outside of a liquidity crisis. Here we are, nevertheless. And guys, this is just a bounce, and I don't mean to give that's one scenario that could happen where you get a breakout could carry, breakout could come back down, and or we wind up making further legs down and for a lot more time. Now, that I don't know what type of probability to give to that last scenario. It does seem pretty popular out there, and maybe it's true. I go and I continue to hold that what we're going to see here is liquidity stabilize. Now that M1 monetary basis total is turning up. We talked about M2 was poor at best. Why this is all signal. You saw the drawdown as we went out over here. Now we're turning up. You say, well, Jordan, that's the expectations over the next few months is not for it to go up much. Well, it didn't over here either, and we definitely saw a lot of risk melting up. Now, Bitcoin just stabilized last time. And I think that coming into the halving, if it weren't for the lockdown, it would have been a lot higher. Again, last time we made the lower low and then swept this low. Could happen again, or we could be in some more prolonged, let's say, accumulation zone. I don't really know what's going to happen, and either do you. And that is the best. The crazy day. Let's see the metals. I want to talk about over here, Destiny 100. So let's go ahead and just take a look at what's going on in the metals. So, which is interesting. So structurally, so far, this could be viewed as, even though it wasn't a lower low, it could be potentially a liquidity grab on a structural lower low, right? Price is higher over here, but we took out the low of the structure, right? If it went like that off the very bottom. So, I mean, that's your hopium. That's my hopium for the day. Metals hanging in strongly today, right? Silver at 90, gold at 52. I don't know. Looks good over here. This could be. I saw a headline. I didn't watch the State of the Union. I heard it was the longest one ever. I didn't watch it, any of it, or hear anything about it. The only thing I saw was that Iran slams Trump's State of the Union speech, accusing him of lying. I don't know what he said, so I don't know what he lied about. About their nuclear program and about how they were handling protests by killing protesters. If from what I heard, I don't know. Maybe it is. We're headed towards the resolution. Absolutely, the robots need the silver. Very, very, very bullish there. We saw also of note Japan saying that they're not going to alter its normalization path, which would mean, let me just jump over here, which would mean that, and that's the game they play. Price comes towards this area, and you see that so far, massive verbal intervention. Price came off. Oh yeah, we're not gonna normalize. Price comes back up. Oh yeah, we're not altering the path of normalization. I mean, we're gonna be raising rates, and it seems that they're able so far to keep price in this range just through verbal intervention. I think that's the best thing they got going on right now. This remains something that we need to continue to monitor. And again, something I pointed out that could wind up being a big risk this year. So again, I blew it off in December. I said, no, that's not gonna reset the market and it's gonna cause them. But watch out for it. We don't know what happens going forward. We have to watch out for it. We're seeing that the S&P 500 is a almost 1%, 1.2% off the all-time high. I wanted to share this with you yesterday. As the S&P 500 was off 2%, you were looking at Microsoft off 30%. Now, this also leads into Destiny 100 in the sense that, from my opinion, Destiny 100 heavily relies on OpenAI success, right? Massive amount, almost 50% of their revenue coming from Azure, coming from OpenAI usage. They also own a portion of OpenAI. So Microsoft is definitely betting on OpenAI, and so is Oracle. By the way, Oracle off 60%. I saw, and we'll come to that in 1 second because I've seen Vakanet posting a chart talking about it was coming into support. Oracle off 60%. If it's able to reach all-time highs again, and that was coming off of Remember, it reached those all-time highs off of that earnings report where they're basically going to be expanding their revenue growth by 100% a year into 2030. I mean, if Oracle makes an all-time high again, that you could double your money, right? They seem to be one of the weakest links in this whole hyperscaler let's say scenario. Is their success dependent on OpenAI? I think so. Hey, if OpenAI goes public and is able to pull off a rug pull of liquidity onto retail, they're going to be able to keep this going for a lot longer, right? But we'll talk about more of that further. Palantir off 30%. Everyone's loving it off as well. I would never have guessed with the S&P off 2% that you would see some of the moves that you saw. And then there's also like Google. And Google held up really well, right? In comparison to the things we looked at. 15% correction on Google. Is that a bear flag forming? Well, it certainly looks like a bear flag forming, you know? What else was attractive at these points? What was Tesla doing? Because I'm looking at the strength now. What I believe are the strength off 20%, right? So you could see how the market was pricing in Alphabet. You know, Warren's baby right now. Tesla. Well, it's attributing weaker, obviously a lot weaker to things of like Oracle and even Microsoft. But what about Amazon? How much did Amazon come off during that fray? Because Amazon came off substantially. Maybe it was like I'm going to start over here and come down. And that's about close to Tesla. And I mean, in reality, is from the high is 25%. But that was a massive liquidity grab. You could see the spring of distribution. And has that played out? It looks like it. I don't know, but it looks like it. And yeah, Amazon, Tesla, Alphabet, they seem like strong probabilities to me. So I don't know. Circle's up 30% today. Does that have Circle's up 30%? That's massive. Wow. Um, Look at this, y'all. Liquidity grab. And then if we were following this, check this out. It's really good. So liquidity grab to the upside. And then you'd have to go ahead and move that off of the touch below support breakdown. Boom. It must be a signal that the Clarity Act is pretty close to coming to fruition. That's the best I got, and I'm it's probably what it is. You could see coin. I mean, the sector is bouncing. It could also be that. I shouldn't speak in absolutes when I'm not sure. And then we have over here block feeling love today, and BTCI is up in lockstep with IBIT today. And one of them is paying a substantial yearly dividend and one is not. But the extraordinarily highly risky sector. So so let's just keep going on this conversation that we're having. And what I'm looking for to bring it into is DSTY. I don't even know what I just said. Do I have a ticker up? There we go. And let's see. Let's start over here and we'll bring it back. And Brownie Brown. Listen, as of the 6th of February, DXYZ deployed much of their cash into Anthropic, according to Grok, holding 42.6 in AI, previously 19%. How do we manage risk here? By the way, here is Vakanet talking about Oracle coming back down into the pocket. Look how a simple crayon line over here could help you manage risk enormously, right? If you're long Oracle and you see the breakdown, you got to close your eyes and you got to manage your risk. If you're looking for a sell impulse, obviously that's the same thing over there. And is it any different over here? How do you manage risk? He's asking the question from the lens of how do you manage risk about, let me just go ahead and first of all, never trust in AI. And I asked for the current holdings of DXYZ this morning and I went to their website first. And I mean, I loved seeing, by the way, OpenAI was their second largest position, and that has drastically changed, or down to 2% on this website as of December 31st, it seems. And that right there is, look, not that I don't think, like, well, what do I think about OpenAI? I use it, I pay for it. Um, I use Grok more, and I've started using Claude a lot more, and I pay more for Claude than I do for OpenAI, and Claude is significantly better. And the only concern I have about Anthropic, you see, Anthropic's not listed here, but we'll talk about that in 1 second, is that the Department of War just said they're dropping Anthropic. They were using Anthropic, and now they've signed an inked a deal with XAI. So XAI here has what looks like a small position. And Grok was like, "Oh yeah, this is like, is Open Evidence OpenAI, by the way, or is Open Evidence is a thing?" All right. First of all, OpenAI, there it is. He's just taken off the website, and I'm like, no, Brownie Brown told me different, you know. And then he went into thinking for 1 minute, 16 seconds, as opposed to just doing a bunch. Imagine the research that thing could do in 1 minute compared to what you could do. Comes back with, as of February 6th, approximate half billion dollar portfolio, and SpaceX is 16%. I'm very comfortable with that. I like that. And I think that obviously market is looking for SpaceX to IPO this year. I think it's going to be highly successful. And I think that their endeavors are going to be highly successful. Anthropic, 23% now. Whoa. Well, all right. Well, I prefer that compared to OpenAI personally. I talked about the one warning I had about Anthropic and losing the Department of War's contract and data, there have you. But listen, Brownie Brown's talking about AI, 46%. Well, at this moment in time, I'm definitely betting on AI. And if it could be spread out between XAI, between Anthropic, between that 2% OpenAI here, yeah, that's awesome. Now, who's going to benefit the most from it? It's probably going to be me and you, and these tools we're able to use, right? So anyway, here we go. Shield AI, whoa, 4%. So how can you manage risk is, well, obviously if this fund is heavily into AI, well, then you're investing it because you believe in AI and you believe in the potential of AI. Otherwise, you would have no business in doing it. And Brownie Brown, we talked about on that sell impulse on Oracle, and I think this is the best way to manage risk right here. As you, it only matters what's happening, right? Price is the ultimate barometer, and you're able to manage risk discretionary by just drawing lines on a chart. You're all exceptionally great at it. And at this point in time, yes, if you break down from this here, well, that's your place to manage risk. I don't know what's happening or why it's happening. It doesn't really matter, but that would suggest that a sell impulse of first time being broken has the ability to carry further. Maybe it has nothing to do with any of AI or these companies, everything to do with the markets overall. I don't know what the story is, but I know it's a place to manage risk. And then to get back in, you just clone this line over here and you just put it back between those two. And if it breaks back above there, well, then you manage risk again by being from not exposed to gaining exposure again. You know that. I know you guys are master at that, at all of this. And Brownie Brown, for sure, you included. Maybe you take out this low over here on a liquidity grab. And if it was a liquidity grab that was regained, maybe then you look for a better entry. So now you exited here, and then if you had the opportunity for that better entry, you're able to get in and grab in ahead of what would be the conservative breakout. So if it's happening, let's bring it up here and talk about it, right? If right now, yeah, this makes sense to be long. This is where you're managing the risk off of. And if this winds up breaching this line, you got to exit the position, and then that opens up the door for us to cover it a lot more closely. I mean, I know Tether is a great business. Is Circle a great business? I would like to know more about it. Can we talk about that, Michelle? And the reason I say that is because I mean, at these levels, IPO levels, you know, it's a lot more attractive. It was then off of the massive euphoria. Here is the Wall Street cheat sheet in action. Massive, massive, massive run up. Everything's gonna be okay, and then the boom. This looks like our double. This looks like the setup here, taking out the low for the ramp, but the ramp hasn't developed. So, well, that's interesting. So in the end, I don't know if it's going to be, because obviously, I all believe that as the business cycle gets extended, as PMIs are reaching around 56, that's when you're going to see that speculation rampant in the markets, and you're going to see lots of alts banging off, and that's the place to begin looking for the exits, the exit door, before everyone else does. But is it going to be? Was it the business cycle? Or was it the actual liquidity cycle as presented here by CTM? I know that I see all over the podcast circuit, Michael Howell is saying liquidity's gone, blah, blah. Maybe he's right. I watch his videos because it's an opposing view. We'll find out whether or not we crush this and get it as we expected. All right, y'all. Easy peasy. We got a lot going on right now coming into earnings. We are holding NVIDIA here. Don't get comfortable. Ace pointed out 8 to 9% expected move. That could easily go from a 5% gain to a 5% loss on the opening tomorrow. So be aware. Do not be comfortable. We see that we got over here pending longs on buy side boost. And we have also a pending long on CTM V4 8-hour both sides. Everyone, I know, I know we can't do it. I would still like to know, and all I need to do is go to check out their balance sheet, check out their earnings. Um, Hopefully I do that. Everyone, I'll see you all on the inside. Have a beautiful day, everyone. God bless you.